Good afternoon. Welcome to all my GST lovers. This is CA Umesh Sharma, Vice Chairman of GST and IDT Committee. In absentia, our beloved and most dynamic Chairman, CA Rajendra Kumar Jain sir, under whose leadership we are organizing beautiful and knowledgeable webinar series on different aspect of GST. And friends, we have today one of the most complex topic, that is RWA, residential welfare associations, means housing societies, and many transactions related to that and impact of GST on these transactions. And we have one of the best faculties that is available to us, that is Venu. We call him Venu, but his name is Venu Gopal. And friends, he is a technocrat CA having a basic knowledge or fundamental knowledge of GST, but also the fundamental knowledge of technology. He knows Python, he is a GST Zen and Tally on Wheel, different platform on which he is working. Further, he knows data analytics and a very technocrat person, always help ICI whenever there is a technological issues with GSTN or a representation that we need to make to GSTN. So friends, when we have such a faculty, you should be very happy today that your faculty will take you toward the different floors of residential welfare association transaction, just like a building where there is a foundation and then floors are built, then people come and reside there, they form a society. So by that way, what are the fundamental sections of GST, then how GST building is built for this particular transaction of RWA, then which floor you have to climb, which floor you have to not to climb, and from where you will get the shortcuts, where you will get the firefighting equipments in the building, and all planning related to GST of RWA will be taken up by Vinu. So friends, please be connected always with GST and IDT committee. Recently, we have launched a litigation certificate course, which is one of the sought after course, and first batch at Tiruvananthapuram has already been done. Now I am also going on 25th on Mumbai and 26th on Ahmedabad. So GST tribunals are going to be formed within few months. So we are trying level based at ICAI to gear up and to prepare our members for the future litigation platform of GST tribunal. So please stay connected. Go through our GST and IDT website, go through our newsletter, go through our webinars and conferences which are happening across India, and always give your feedback for betterment of ICI, for betterment of GST. We ICI are partner in nation building, and GST is one of the subject where we are partnering with government for betterment of our nation. So with these opening remarks, thanks to our tech team for the arrangement of this virtual meeting. Inpreet, Secretary Smita ma'am, and all the team, they are working day and night to provide us the platform where we can discuss the various unresolved issues of GST of RWA. So with these words, welcome you, Venugopal sir. Over to you.
Thank you very much, Vice Chairman sir, and for your kind words and introducing about the topic. And as sir rightly said, this is a resident welfare association of a building, and very much required a foundation and level by level. Special thanks to Indirect Taxes Committee, ICI, for choosing different topics every time and bringing different flares of the subject. As Vice Chairman sir rightly mentioned, what we are going to do in today's session is I'll very briefly put a foundation explaining various provisions of the law which would be there under the RWA. But at each provision, and briefly we look at the various case studies. Friends, do not expect a ready-made answer whenever we have an issues, especially those issues which have traveled to High Court and the Supreme Courts. Itself indicates there are two positions, and position which is of the contention of the revenue and the position taken by the taxpayer. The matter reached the High Court itself indicates that this is a possible litigation and two views are permitted. What we always read from the Act is simple provision which is given and which can be interpreted in multiple ways. And that is what we are going to see today. I have tried gathering the different states, different people who have adopted different positions and what would be the impact of it. Yeah. Some of the things, if you have not thought of, you can also put it back as a question. I have looked at various questions that have come so far. I'll take up the questions at the end. Let's start with the basic fundamental thing of levy. And section 7, the scope of the supply. In fact, so the genesis of anything to attract GST, it should fit into the definition of supply. And for the purpose of this act, the word expression supply would include, I'm including the 7(1)(a), but the activities or transactions by a person, please note the activities or transactions by a person other than an individual to its members or constituents, either for cash, deferred payment, or valuable consideration. Now, this is something which is not there from the day one. You may ask, we are talking about RWA, and if this was the emphasis that RWA will get into, does the levy of RWA was not even existing till this point? Would be the first question that would come in. But the 7(1)(a) also says that all forms of supply, sale, barter, transfer, exchange, made for a consideration by a person in the course of furtherance of business, will that consider a sufficient ground for RWA being taxed without 7(1)(a) being there? So two important things that we need to see, whether business includes this or person includes this. 2 subsection 17 and 2 subsection 84, I've just extracted for your reference. 2 subsection 17 includes provision by a club, association, society for a subscription or any other consideration of facilities for or benefits to its members, right? So here it includes club, association, which is resident welfare associations. So the scope of the business is extending that this is an activity of a business when you're doing something with your members. And the person would include the association of person, right? So the genesis of GST arises when there is a supply, and 7(1)(a) said the business has to be there, consideration has to be there, and there has to be a person. All these ingredients have fit in. So the levy to an RWAs have kicked in. We will come in a while. If that being there, what was the need of 7(1)(a)? Having said that, we need to know another basic provision. When do one has to register? Section 22, which deals with the registration, where every supplier liable to be registered under this act, where he is making a taxable supply of goods or services or both, if his aggregate turnover in the financial year is exceeding 20 lakh rupees. I've just given a small case study for you to reflect. Look at an RWA. Now we all know the 7,500 concept. They are charging monthly maintenance charges to the flat owners and approximately 6,800 per flat. Annualized, they have collected 48,96,000. And where the maintenance charges exceeded 8,000, some units, it is 14,40,000. So I've given both exempt and taxable. Apart from that, they have also realized some exhibition income, advertisement, hoarding. The corpus interest on fixed deposits is there, which earned 75,000. Community hall charges 1,80,000. 69.5 lakhs is the total revenue of that association. If I have to summarize the category of taxable versus exempt, 19,80,000 is taxable, exempt is 49,71,000. Now, I have noticed most RWAs are looking at registration only if their taxable amount exceeds 20 lakhs. By now, it is pretty much settled. The 20 lakhs that we have to see is aggregate turnover, which includes the taxable and exempt supplies. So the 20 lakhs limit should not be only looked at the taxable supplies. Everything has to be looked at, and the RWAs have to have registrations, irrespective of the limit, looking at only for the taxable supply. So in the current example that we have looked at, they definitely need to register. Now, having said that they register, we know for a levy to satisfy, there should be all elements of the levy. So what is the nature of supply? What is the rate of tax? Everything has to be there. Value of supply, person, supplier, recipient. Unless any of this ingredient is missing, if there is something is missing, there cannot be levy. Else the levy would attract. So by saying so, what would be the HSN, the nature of service? So when I looked at the service descriptions, SSC codes, the appropriate HSN for the RWA would be 9995, which is the miscellaneous entry which we generally use, and that 98 homeowners association, and the rate of tax is 18%. This is where the RWA would get classified themselves when they are raising the invoice. Now let's dwell into what the exemptions that are available to the RWA, especially the central tax rate 12/2017. So there is an entry 77 in 12/2017 for housing or residential complex. Entry 77 has three separate elements. Let's look at those elements. Services by an unincorporated body or a non-profit entity registered under any law for time being in force to its own members by way of reimbursement of charges or share of contribution, A, as a trade union, B, for carrying out activity which is exempt for levy of goods, or the last, very important. So I'll continue reading, to its own members by way of reimbursement of charges or share of contribution up to an amount of 7,500 rupees per month per member for sourcing of goods or services from a third person for common use to its members in a housing society or a residential complex. Now, this is the entry that we are going to look at today. I will pick different ingredients of this entry and we will look at the fundamentally where does it stand. Starting with understanding this 7,500. The threshold limit is 7,500. Consider a scenario where the aggregate turnover of the RWA is exceeding 20 lakhs. There are some units which have more than 7,500. Would the exemption entry applicable? Answer is no. Does it mean that they have to register? Yes. My turnover is more than 20 lakhs, but all the units, the monthly maintenance is less than 7,500. So I am referring to the second point. all the units are less than 7,500, then I don't need to register. This exemption entry fits to me. If all my turnover is exempt, I do not need to register. So exemption grossly applies to me. Let's say my turnover is less than 20 lakhs and there are units which I'm collecting more than 7,500. I don't need to look at it for registration because the exemption of 20 lakhs would be applicable to me. So whether more than 7,500 or less than 7,500 doesn't applicable. So it is, I am not required to register. And the contrary of it, the input tax credit would be available. Yeah. Now let's get into the next aspect of this exemption entry. So I'm now specifically looking at 77C, where we are saying the services by unincorporated body to its own members by way of reimbursement up to an amount of 7,500 for sourcing of goods or services. These are the points. Now, let's look at who is the service provider. If this entry has to be applicable, this can be applicable only if and only if the service provider is an unincorporated body or a non-profit entity which could be registered under any law for time being in force. And who should be the receiver? Receiver should be its members. Because all our case laws today would be arising out of different points coming out of this. So the service provider should be RWA, receiver should be its members. And providing what? Providing by way of reimbursement. It is collecting by way of reimbursement or some charges which is share of contribution. Either I charge to him to pay to someone, or I am collecting as a pool and sharing a contribution and giving it. Either of it. Okay. And this should be both for sourcing of goods or services. So it could applicable be for goods or services. Though my output is service, but my input, this money is collected towards sourcing of goods or services. Very important point again to notice is from a third person. So this exemption is not applicable if as an association on a principal to principal basis the service is being provided. This exemption would be applicable only if the sourcing is done from a third person. Again, mere sourcing from a third person is not sufficient. Such sourcing should be for the common use. If there is a sourcing from the third person happening to a specific person, again this entry would not be applicable. This entry to be applicable, it has to be for common use of its member. And the last important ingredient is it should be in a housing society or a residential complex. So it should be in a housing society or a residential complex. And as of now, so this limit always keeps time to time changing. As of now, the amount is up to 7,500. So if I have to break this entry and if I have to read it, we have to read it into this category: who is service provider, who is service receiver, and what is being provided by way of reimbursement of the charges, and what is the quantum. This is what it has to be read. If you look at the services that are provided by the RWA and analyze how much of it is common use, how much of it is specific use, itself is your first case to understand if the collection pool includes any of the specific, the entry shouldn't be made applicable. Because generally people try to club and look at 7,500. The answer is no. The expense analysis for the exemption, for the purpose of this exemption, is only for the common use. What is common use? There is a security outside the building, outside the main gate, or for each of the tower, could be anything. The electricity, which is common. So the electricity which is there specifically to the individual houses, there could be a situation where there is an owner who has made an investment and the unit is vacant and he is requesting the association to take care of payment of the monthly electricity bill. The answer is such collections and reimbursements do not form part of it. It is not a common. What has to be there is common electricity and common water. The repairs and maintenance that happens to the building, which is common. There is a clubhouse, swimming pool, the maintenance of that. It could be another case where there is a subscription which is made to the gym, and members who are paying the subscription to it, only they are allowed. The next question that comes is when we say common use, is it qua? Please note, when we say common use, is it qua? All the members in the association or a group of members. So when the clubhouse or access to the swimming pool is paid, only who are regularly maintaining the additional subscription to it. If there is an additional subscription, would this fitting into that common use? And let's say the 4,000 rupees is the monthly maintenance charges, and 2,500 additionally if you are opting it for being part of the club. Now 4 plus 2.5 is 6.5, well within the 7.5 is the first argument. But the 2.5 is common to only few set of people. Maybe the next year, owing to different maintenance, they may come make it as 3. When that happens, still 4 plus 3 is 7. When that happens, can I say that it is 7,500, or the word common is to be looked at qua whole of the association? This is the another point one needs to be very considerate. And I am of the view, by the way, whole of the session, I would be bringing out different examples, different case studies, and the different answers that would be provided. None of the answer which I am giving, I am talking from the section or the act book. If you notice, I have read the provisions of entry 77 2 times, so 3 times. What is there in the act is only that, read with 2 limited circulars, right? So leaving that, anything that we are now talking today is interpreting those words, and in light of some of the High Court judgments or service tax, erstwhile service tax provisions, or some advance rulings. Anything we are discussing and a base is taken, a position is adopted, is not free from litigation. That's more important. The lift and generator maintenance is common, administrative expenses are common. What are the specific things which will not fit under exemptions? Community hall charges. Most association would have a community hall. It is given for rent to its own members for celebrating birthday or small occasions where the fee is charged. It's a specific levy. Second, it is not something which is sourced from a third person. It is provided by the association to its members. Move in, move out charges, sale of scrap, exhibition income, change of whenever the unit is sold, the register member is updated by way of bylaws if they're collecting a nominal amount. All these services which are provided, they are not under the exemption net. They're not under the exemption net. Now, let's start with the case study 1. And another important thing about Resident Welfare Association, a very important thing, which is quite different from a regular business. In my business, I am the owner of the business. A decision which I am taking, I am responsible for it. But in a resident welfare association, there is a body, governing body, who has president, secretary, treasurer, everything for a fixed period. They would be changing time to time. In fact, a position taken by them went adverse, negative, an aggressive view. It might be okay if some of the members say, why should we pay tax? Let us fight. Some of the members. And some of the members say that who will bear the responsibility of when an adverse position becomes a tax liability, penalty equivalent to tax? Most likely, because that's how department always look at that you are suppressing and you are not paying the tax. It's only 74 for them. Interest, because these notices arise after 4 years, 5 years, the things that are coming. Interest, when it is charged after 4 years, 5 years at 18%, as equivalent to the tax amount. That means 100 rupees is becoming a 300 rupees. And who has to pay tax? By the association which is going to be there after 5 years. People who have taken the decision, they might be there, might not be there. They might have sold the flat and they would have moved, or they are not in the governing council. And I have noticed most AGMs, the fights would happen on type of vendor who has been chosen, quality, L1, everything. Inside of that, how much one can take a risk on the various cases that we are going to look at it. Keep that point also in mind while making a decision or if you're consulting any of that. First case, let's take a scenario. Mr. Rakesh, who is having 2 flats in Sunrise Towers, and the monthly maintenance charges of the flat 1 is 6,000 rupees, and the monthly maintenance charges of the flat 2 is 8,000 rupees. The monthly maintenance charges is 8,000. It's only one person who is there. Should this exemption 7,500 is being which is collected, should I talk from Rakesh? Now you may say that 6 and 8. When I average, it is 7. So it is well with below the 7,500. So both are exempt. View 1. Now what if I change 6,000 and 10,000 to the second one? So it is 16,000. Now you may say it is being collected by one person. So 2 flats, 7,500 into 2 is 15,000. You are collecting 16,000. So there is no exemption. Yeah. Can we take this position? Right? Even though you are collecting by one person by name Rakesh, there are 2 apartments, 2 charges. Flat 1 is different, flat 2 is different. Unit 1, unit 2. This exemption monthly maintenance, when we say per member, the member should be recognized as each of the unit. So 7,500 is for the unit. So the first flat would be exempt, the second flat would be taxable. The next question that comes is, if it is exceeding 7,500, since up to 7,500 is exempt, should I exclude the 0 to 7,500 and levy 500 rupees at 18%, or whole of 8,000 would be at 18%? Is the another thing. Initial FAQs that came, it's not even FAQ, There are handbooks that were written which considered up to 7,500 was exempt and beyond that was taxable. And the view was upheld in one of the judgment. While the advance ruling said it is anything over and above 7,500, whole is taxable. Same position was taken by the circular in the CBIC circular 109, right? So the Madras High Court said it must be charged on the amount collected over and above 7,500 in TVH Lumbini Square Owners Association case. But while Circular 109 held that the entire amount has to be paid for GST. This is another thing that needs to be taken. And these points came up for the discussion in 37th council meeting. I've just looked at some of the discussion in the agenda. One of the point was, can there be a complete exemption? Where the request was the blanket exemption. Now let's look at the reason for the blanket exemption. Assuming the taxability is 5,000, 7,500, 10,000, whatever, it's a number. What is the association doing? It is collecting services or goods or services from someone and providing it to the members. Cost is shared, collected, paid back to the government wherever it's applicable. Am I making profit? No. We all know, please note, we all know GST is never a cost for a business person, and it is a value added tax. Only on the addition, wherever the value is getting added, it will get it gets added to the chain. If I am a business owner buying something for 100 rupees, let's say 18 rupees GST, 100 plus 18, I am selling it to the customers again 100 plus 18 by levying GST of 18 rupees. My cash outflow every month would be 0. 18 rupees is ITC, 18 rupees is output liability, 118 is the cost, 118 is my profit revenue cash from the cash perspective, 118 is outward, 118 is inward. My cash is tallied, my P&L net profit is 0. RWAs are completely non-profit. They're not intended to make any profit. Any surplus is generated, it is back to the members. So having said, isn't it cost and revenue neutral? But look, even if I don't pay GST, it becomes cost, gets absorbed to the members. If I pay GST, I will take it as ITC, I'll collect from the members and pay. Technically, it shouldn't be a bothering to any RWA if I don't even give the exemption, or it shouldn't be bothering to the government if, say, blanket exemption given to the RWA associations. Unfortunately, this fundamental concept doesn't work whenever you have some goods or services which doesn't suffer GST. If there are some goods or services which doesn't suffer GST. So I am procuring something which do not have any input, and I am selling which has an output. So I would be collecting from the members. So from the cash flow perspective, 100 is the purchase. Sales would be 100 plus 18, 118 inflow. That 18 will go back to the government. So now if you see, the moment in the chain, if there are some exempted goods or services coming in which are not taxable, there is a different math. Hence, the consideration from the 37th agenda is there cannot be a blanket exemption. The next question which came up is it really a business? So this was discussed in length, and they said 217E covers this. It's a business, so there would be a service and GST is applicable, right? So this is what you need to be considerate. Let's look at case study 2. Mr. Vijay, he is using his flat as his place of business. After COVID, we have seen A lot of people doing work from home. Bangalore is a hub of startups. There's a place by name Kormangla. Most number of software companies are registered in that area. It is like you will find every day one startup coming up in that area. So where's the place of business? Their house, their room, one room in that. It's a residential unit which is used for the commercial purpose. Now, should the GST be made applicable because a GST registration has been obtained on that place, or the exemption of 7,500 should be made available to them? If you notice, here we are saying it is a residential unit used for commercial purpose. And the exemption entry, the entry is 77, clearly says that it is not a commercial entry. It clearly says it is a residential complex. So in the current case, it is a residential complex. He is using for the commercial purposes. So the exemption to RWA would continue and they can avail the benefit of 7,500. Let's move to case study 3. RWA is collecting membership fees of 3,500 per month for the gym from the flat owners who are using. I have highlighted. There are community hall charges for renting to a hall member for organizing the function and the name change charges. Will all these form part of this maintenance charges 7,500? Remember, in the earlier case, I have said 4,000 is the maintenance, and those who are subscribing to gym, I am collecting extra. So why am I collecting extra? Because there is a gym trainer, gym equipment, and the maintenance of the gym, everything. Then there are also community hall charges, which is being collected only to people who are using it, right? So the question that comes is for the common use of the member. Community hall is also for the common use of the member. In these cases, we should apply each of the thing, that is for sourcing of goods or services from a third person. For sourcing of goods or services from a third person. That is an important leg that we need to apply. Is it a service which is provided principal to principal, or it is a goods or services that are collected and paid? It is something that needs to be tested. Very clearly, the community hall charges and name change charges will not fit under this exemption, and it would be suffered a separate entry because it is a principal to principal levy that is made, even though it is made for its own members. But the gym, the subscription to the gym, so there are two schools of thought. When the word used is for the common use of its members, it has to be common, unconditional. And another school of thought, the gym is definitely the cost which is collected is purely again towards the maintenance of the gym, which is incurred by the RWA. It is not a principal to principal supply, so it fits into this exemption entry. Let's move to the next case study. If during the year, I am collecting the monthly maintenance charges and they are less than 7,500. So 10 months, it is less than 7,500. 2 months, it has exceeded. It is more than 7,500. Now, should the test to be done for the year, like in a employment contract, your salary is 12 lakhs per annum, but that means you compute 1 lakh per month, or each month is a separate taxable unit. Should I see each month as a separate thing? How one should look at it, right? The applicability to test is qua year or qua month. or each of the subsequent month has to be retested independently. I would again refer back to the circular, the wordings in the circular. One may say that it could be a mischief that my monthly collection, let's say, is 10,000 rupees, which will be otherwise 1,20,000 rupees per annum. I will split it as for 11 months, I will collect 5,000 rupees, 11 into 5, 5,000, 55,000 claim exemption. In 12th month alone, I will be collecting balance 65,000 rupees and I will pay GST on it. Rather paying a GST on 1,20,000, I will follow this practice every year. Now here comes the question. If someone is adopting a procedure that it is per month and I can do it, it is not free from litigation. But look at in a natural course. Every month I am paying 7,000 rupees. After the AGM, there are costs, everything has changed. They have changed the per unit. So all this while I was paying at 4 rupees per square feet. Now they have changed it to 4 rupee 40 paise. So I was at the 1,800 square feet apartment. Let's say all this while I was paying 7,400. Now I'll be start paying 8,200. There, it definitely you will say that the period of collection is qua month and you cannot annualize and you will be paying for the full year, right? So I am of the view when this 10 months collection is less than 7,500, the balance 2 months which has exceeded 7,500, only the levy should be coming to those balance 2 months 7,500. Let's look at the another case study. Here, the matter is very simple. Like a resident welfare association, you can also see there are small commercial complexes, shopping centers, office towers. Again, there would be an association made and they would be collecting monthly. Let's say their monthly maintenance is less than 7,500, which is 5,000 rupees. Can this apartment society, which is charging less than 7,500 per flat, can they avail a benefit under this entry 77? And when I say 77, it could be any of that A, B, C, right? So C will not fit in because it is applicable only to a housing society or a residential complex. A shop owners association which is collecting, it will not fit into this activity. And neither 77A trade unions or the 77 capital A, which is unregistered body for promotion of trade commerce, wouldn't be applicable in either of it, and it is liable to tax. So these are the one simple entries which relating to the understanding section 7, the entry 77. Let's move to another aspect of the GST ingredients, which is input tax credit. Now, input tax credit, we all know 17 subsection 1 to 17.6 read with rule 42. Anything used for 100%, it is exclusively available. So T1, T2, T3 credits, you cannot take. T4 and C2, the common credits, you are eligible. That is what we know, right? Now let's understand from the RWA perspective. How is it we have to look at it? We will take a simple case. There is an RWA where there are members are into two categories. One set of members are paying 7,000 rupees. Another set of members are paying 8,000 rupees. 15,000 rupees is what they totally this 1 and 2 put together. Let's say in a complex, in a residential this society, there are 10 floors. monthly collection is 1,50,000 rupees. One of the unit is small, which is paying 7,000. Another unit is big, which is 8,000 rupees. So 10 floors, each of the floor 15,000, 10 floors, 1,50,000 rupees is the monthly collection. How did they arrive this monthly collection of 1,50,000? Let's say they have computed their security, gardening, everything, whatever their cash out, including GST, the total bill component which they have received in the expenditure side, they made a quotation and estimate. It came to 1,50,000 rupees, and they want to collect 1,50,000 rupees from the members. Now, generally, the charge is made predominantly per carpet area. In fact, there was a school of thought, this is a common area maintenance. This is a common area maintenance. Whether the flat is big or the small, shouldn't the common area be very common? Shouldn't it be the rate which should be collected from the member should be flat? Irrespective, like someone can say, instead of collecting 7,000 for smaller unit, 8,000 for the bigger unit, collect 7,500 rupees for each of the unit. In fact, there was one trade circular of Maharashtra which was also quoted, okay, which is not from the GST, okay, by the way. But definitely no one would agree with the view, because a bigger apartment means little more facility, accommodating for more number of people. Now, we don't know whether actually more people living, not living. Today, we are living in the society, larger houses, but a nuclear families. While earlier it was a smaller houses and joint family. Now, having said that, look at a scenario where the people with 8,000 rupees, let us divide it by square feet, 2,000 rupees 2,000 square feet, so 4 rupees. So per square feet, that's how it came to 8,000, and for someone came 7,000 rupees. Now, 4 rupees per square feet, is it valid to levy everyone? So I am collecting 4 rupees from everyone. Cash outflow would be mine. So GST is all inclusive basis. So 4 rupees. So method 1, look at the method 1. 4 rupees is including GST. I will do 4 divided 118% and I will pay GST to the government. That could be method 1. Method 2, I will say 8,000 plus GST and 7,000 rupees. So for one set of people, 4 rupees plus GST, another set of people, 4 rupees. Could be method 2. But in both of this, I would say the ideal method would be, you have arrived at 4 rupees. Now, this cost, which includes GST portion which is paid to the vendors. By the way, you may not get the 100% accurate, but it could be a little iterative thing. This cost includes GST, where partly which is eligible to the extent of the taxable supply. Does RWA has a 100% eligible credit or common credit? 90% of the time, everything is a common credit. So this partly credit which is available, divide it into 2 pieces for 8,000 people and the 7,000 people. For the base rate of 4 rupees, for the 7,000 people where the GST is becoming cost, you will be adding and recovering it from them as, let's say, 4 rupee 40 paise. 4 rupee 40 paise. For the other set of people, 4 rupees plus 18%. 4 rupees plus 18% you will be collecting for other set of people. So you will do a method which is scientifically right for collecting the members. So that is where I had put another case where the members having partly more than 7,500, less than 500, should the benefit be computed on net basis or cost to be apportioned to all the members and do a come tax benefit, or do we apply a differential rate? There is a base rate plus GST 18% for more than 7,500, and for less than 7,500 people, there is a base rate plus whatever is the GST cost per SFT that they are getting. Is that the way that has to do? It's a commercial transaction. Nothing comes in the law. This is a commercial transaction that needs to be aware of. Then the next thing I want to talk about, reverse charge mechanism. And we all know the 9.4 doesn't apply. It's only 9.3 services that would be applicable. And just for the benefit of any RWA members who are there, ITC would 100% be eligible, subject to that bifurcation of these days. There are many entries of RCM, notified services. I have highlighted the services in the blue color, especially the GTA services would be taken. There is a legal advocate services. I noticed there most RWAs have one or two members who dispute on the payment, and there is some legal cost. Government services, there are permissions that are obtained, especially the builders, while doing the building, they would have done a deviation, violation. And the members are completely not aware. As a home buyer, you are not equipped to understand that. What is that you have done? You have went ahead and procured, and after some time, government released a notification. Like in Bangalore, here in Karnataka, we have this simple terminology called akrama sakrama. Like akrama is something unauthorizedly you have done. Sakrama, you pay some betterment charges and take it, correct it, and now like how the water is thrown by the sage and your sin has gone, so you have become better. Now you are paying these charges to the government, various things. All these under RCM. Security charges, which is quite common, which is under RCM. So the RWAs, while they are making the payment and doing the cost computation, they have to ensure these colored in the blue also have to be taken care and do the costing of it. This is something which I see many RWAs miss in doing it. When it comes to invoicing, the question that always comes is, can a member of the society avail input tax credit? Let's say I am saying that, okay, I am doing business from the place. I am a running chartered accountant office. I am sitting in that thing and I am doing the business. I want the RWA to raise an invoice. I want the RWA to raise an invoice in my firm name. Flat is registered in the personal name of Venu, but I am insisting that you raise an invoice in my firm name. I am giving Venu and Vinay, I am giving GST number, and I am telling the association to raise an invoice on it. Now the question comes, who is the recipient for the RWA? Is the member a recipient? If it is providing service to someone else, so is the service is being provided to that member? Is the service is being provided to the member, and should the invoice necessarily be raised to the member? Or I would go into the act and say that who is the recipient? Okay, yes, the member is the individual person Venugopal, but I would look at the definition of the recipient. Who is my recipient? Is the recipient is Venugopal or it's a firm? Now, for the benefit of everyone, if you look at the two subsection 93, the word recipient is when a consideration is payable and the person who is liable to pay that consideration. Now, in case of an apartment association, who is that person who is liable to pay? Liable to pay is only that member. So there is a school of thought that the association should not raise an invoice to the business entity. It has to be raised to the member. Little tweaking of that question. What it is not my firm. I am a proprietor. I have a proprietary registration number. I am telling the RWA that, okay, you raise this invoice to the proprietor. In fact, this is the same case even the CA Institute had to deal with when a membership fees which was paid by the company for its members, which in the membership number is in the individual name, the partnership firm or the member has to pay. And there were two schools of thoughts. The entity is the one who is paying. Even here, it's the same thing. So there are positions that have been taken. The firm or someone who is saying that, okay, you raise an invoice to it, that person will be making the payment. So the recipient will be that person and they would be eligible to take the credit. Both the schools of thought that exist. All right. The question for various aspects of advance receipt, I will come in a while. I'll briefly show about what is the returns that needs to be done and the invoicing to be done. So whenever it is members who's more than 7,500, raise a tax invoice. Less than 7,500, raise a bill of supply. There is a situation called taxable and exempt supply, invoice come bill of supply for B2C members. Is it possible to have? I have one case study where portion of my monthly maintenance, I will say towards exempt supply. A portion of monthly maintenance is taxable. Out of 10,000 rupees monthly, which I'm collecting, 8,000 rupees I am saying common maintenance and 2,000 rupees I am saying electricity and water exempt. Is it possible? We'll see. But in an invoice, if you have taxable and exempt, one has to raise invoice come bill of supply. And while filing the returns, they have to ensure that the necessary thing is disclosed in the returns, GSTR 1 or 3B. The association can opt for the QRMP scheme if their turnover is less than 5 crores. And accordingly, they will show in the returns, if it is B2B table 4, B2C table 7, the exempted portion is table 8. Now, this is how it happens. Let's now start looking at some of the critical issues which one has to. I have covered the basic provisions of the levy, entry exemption, ITC applicability, return, and the invoice reporting, right? So basic provisions have been covered, and we have seen prima facie whatever appeared in the exemption entry, is it applicable or not, we have seen. Now let's level up our discussion and look at little more complications that would come, which are not apparent emerging from this entry definition. Issue number 1. Imagine a large commercial complex, like as you are seeing on the screen. There is one tower 1, there is a tower 2 and the tower 3, and there is a common area. There is a common area. All this while you may ask, aren't we discussing that the Residents Welfare Association taking care of the common area? So what is the new challenge in this? The challenge in it, maybe the tower 1 is economy tower. Tower 2 is a premium tower. Tower 3 and others could be some medium towers. What do you mean by economy premium? In tower 2, let's say there is a gym, there is a swimming pool, everything. Now, if you start charging that cost apportioning to everyone, what would the economy guy says? Look, you got to take care of your internal cost. You got to take care of your internal cost. What we have to share is this common cost, which everyone are using. Okay. Now, if that being the case, can there be multiple resident welfare associations? What do you mean by multiple resident? So tower 1, RWA1, tower 2, RWA2, tower 3, RWA3. For the common area, I will create one more association called Apex body, which is governing all this, and all the members of all the towers will be part of this common, which is Apex. Now, can I create the artificially another association? Now, look at from after RERA coming in. There is a concept of association which is formed. What is the association which is formed by the builder is the common that you are seeing, no? That is only the association which the builder has formed. The common area assets are handed over by the builder to that common tower, common body. After that, the new 1, 2, 3 which you are seeing, they are the associations which the members of that towers have formed. So if you notice, 1, 2, 3 is formed afterwards by the members saying that, look, my tower I will maintain. That common, let the common guy maintain. If I go back to the entry, it is an unregistered body. So all are unregistered body are registered for something, who are charging 7,500 up to for sourcing goods or services for the common use of its members. Each of that they are doing. Now the question that comes is, let's say the apex, which is this common that you are seeing in the screen, is charging 5,000 rupees every month. It is charging 5,000 rupees every month. Tower 1, that slim tower, lean tower, economy tower, is charging 2,000 rupees for its own tower. So there is only one security which is there in the tower. No facility, nothing, no other things. Tower 2 is charging 6,000 rupees every month because it has to maintain swimming pool, gym, everything which is part of the tower. Let's say Tower 3 is charging 4,000 rupees. Common, they are charging 5,000 rupees for taking care of all this large park, everything. Now, should that 7,500 per month per member benefit should be given even at the tower wise and apex wise? This is another thing. Two schools of thoughts. People say that is common a resident welfare association? Yes, it is a resident welfare association. Is the members of Tower 1 and members of common are the same? Answer is no. Common has 1, 2 and 3. 1 has only 1, 2 has only 2, 3 has only 3. Is it intentionally, purposely bifurcated? Answer is no. So looks like that benefit should be given. That's another one school of thought. But my view, which I strongly say, that what is the standing of this common tower? Now you may say that is the tower that was actually first formed. The DOD is done and all the documents are handed over. That is the tower which has been done. So shouldn't it be looked at as a tower? So where will be the registration in the societies will be done? Now, registrar of society is a registrar. Anyone goes and gives a document, he will give. I am of the view the 7,500 benefit should be looked into by clubbing this, because both all are under single thing. But it is again, it is worth discussing, litigating, because we have bigger litigations coming. In fact, this is very, very small point which I picked up, but this is another area one have to look at it. The next area to look at it, the collection of water and electricity charges separately. The common water and recovery of electricity charges on an actual basis, I will recover it separately. So the invoice which I am raising and sending, let me just show you how. If you see on the screen, the invoice which is being raised, I am saying maintenance service of common area security housekeeping is 6,800, less than 7,500 exempt. Electricity charges, actual 1,200. I'm creating some submeters and I'm doing. Water charges, actual, each house I'm collecting, and whatever my monthly bill which is coming, actually I'm allocating and I am doing. Total is 8,600. So GST I'm saying exempt, exempt, exempt. Why electricity and water is exempt? Electricity and water, now I'll be referring to Circular 206. Circular 206. Or water. In no capacity, I have a right to sell the water. I'm only collecting, distributing it, which otherwise is an exempt supply. under entry 99. So why at all should there be a levy? This is another practice that is going where the water and electricity, which is collected separately, and the common maintenance, if it is more than 7,500, excluding that, that is taken as taxable. Below before that, it is taken exempt. My view is this artificial splitting. Now, don't try to fight with me. Why am I saying artificial split? Actual electricity, actual water charge. But I would still say this is a composite supply under Section 8, and this segregating to 7,500 for the other items will not work. Now, you may come back and fight. How do you say it's a composite supply and why it is not an independent supply? Electricity charges is actual. This month is 1,200, next month could be 1,215 or 1,300. Water charges 600 rupees, 650 rupees. So this is collected on an actual basis. I am in no way principle to principle. I am making a supply of it. Yeah. So this is an argument, another one school of thought, which again I do not uphold. Again, friends, trust me. In the whole of this session, we are not looking at finding an answer. You should always be aware there are always the multiple answers that would come up. You got to be informed, the view of the department, view of the SSC, what are the consequences if you take one view. You got to be always aware. Next, another case of, let's say, this 8,600 which is being computed. The association has corpus, and out of the corpus, they earn interest income. They earn interest income. Now, if they decide to offset the interest income from the monthly charges, let's say I have given one more split of the bill. My monthly maintenance expenses per flat is 9,000 rupees. But I am getting a subsidy for each of the member basis the interest income 2,000 rupees. So the actual collection is 7,000 rupees. So members have created a corpus. In fact, corpus itself is another question. We will come in a while. Members have created a huge corpus so that interest income will take care, and we don't need to pay monthly maintenance. The actual collection is 7,000 rupees. Can someone say that, see, monthly maintenance per flat is 9,000. This subsidy that you are giving 2,000 rupees cannot be reduced under Section 15, the value, which is not a subsidy given by the government, and the GST to be computed on the 9,000 and not 7,000 rupees. Now, this is the another thing, and I am of a view that what is levied is whatever is the money they require month over month. They require month over month is only 7,000 rupees. If I am showing on the face as a subsidy given, not given, my levy is only the actual shortfall that will be collected from the members towards maintenance. So the exemption can still be claimed and it cannot be looked at onto a gross basis. Let's talk on this corpus itself. What is this corpus? Should at all there be a GST levy? In fact, in my previous slide, I said the example, okay, I haven't given the corpus amount. Let's say a bulk, each of the member has given to the association a corpus of 5 lakh rupees. Now, what will be the treatment of this corpus which is being collected? I want again all of you to appreciate and be aware there are different types of corpus. You may call it as sinking fund. You may also look at saying a small association. And why do people need corpus? We know the life of the building is say 60 to 80 years. But after 15 years, you would need some of the maintenance, and let's say every 10 years, you would want to paint and you want to change water lines, certain things, which are capital expenditures that are going to be incurred. So you want to create a corpus to take care of the capital expenditure that is being incurred. Now, when you're collecting the money in advance as the corpus, what would you treat it? Would you say that I'll apply rule 50? It is in the nature of advance. I don't know where it will be used, when it will be used, and I will pay 18% GST on the advance for the future services received. Could be one aspect. Or there is an initial membership one time capital fees which is collected at the time of buying the apartment, and the corpus could be kept as a distinct reserve. This is another important thing one should be knowing, that the associations make a bylaw saying that the money from the corpus should not be used. Only the interest earned on such corpuses only should be used. So if they want to draw any money from the corpus, let's say the corpus money has put into an FD, no association members committee, governing council has right to use the funds given for the corpus for the general purpose. So there is a specific fund and general fund. Now, when there is a specific fund created with a rider that fund cannot be used unless there is an approval given by the members. So it is very important that one has to refer to the definition of consideration 231. What does it say? When does it become a consideration? And especially something which is in the nature of the deposit. Only when that is applied towards the supply, only then it becomes a consideration. So here, what matters is the bylaws. How that is documented would matter. For example, you are collecting every month. If your cost is, say, 6,000 rupees, you are collecting 1,000 rupees extra every month to accumulate your surplus towards capital maintenance. Or once in 3 years, once in 5 years, you will send an invoice saying that the monthly maintenance will continue to be 6,000 rupees, but yearly once let the member pay 15,000 rupees. You send an invoice. Now, I would say the treatment of all these 3 points that you are seeing in the scenarios is not the same. It is not the same. It goes by the underlying documentation. Nothing will be treated as advance all the scenarios, not that everything will be deferred only when it is applied. But let me give you the challenge of this. Let's say you have paid in advance. And you are applying it 5 years later. You need to know that when it is being applied 5 years later, you are eligible for input tax credit, and that has to be proportionately applied. Contrary, the funds that are collected lying in the corpus, you have not paid any tax on it. 5 years later, you are drawing money from the corpus, you are utilizing it. Nothing is routed through the P&L. So again, one has to be careful, since you have not paid the taxes there. When it is withdrawn, the taxes needs to be paid. So this, the application of mind has to be done, and very important. I will extend the corpus towards a specific asset. I will extend this corpus to a specific asset. I have given with a small case study. Let's say Sunshine Towers Resident Welfare Association is planning to replace its lift. One of the lift is not working. They either do not have a fund, or their fund is not sufficient. So they are deciding to collect a specific fund. Let's say 25 lakhs is required to replace the lift, and there are 100 houses. Each of the house has to contribute 25,000 rupees. Now, when this one-time additional 25,000 rupees is paid by the member, when this one-time additional 25,000 is paid by the member, would the 25,000 be liable to GST? Or should I apply 25,000 pro rata over the year, which is approximately 2,000 rupees? So those members who are like right now paying 4,000 rupees, they fall under less than 7,500. Exclude it. Question number one. Question number two. Can I treat this as a pure agent reimbursement? Can I qualify this as a pure agent reimbursement? I am incurring 25 lakhs. I am collecting 25 lakhs. Right? The next, assuming I am collecting it from the members and I am raising an invoice, can I utilize the input tax credit? I know 17 subsection 5, clause C, clause D, immobile property. It is a different question that lift is a immobile property or not. For a moment, let us take lift is an immobile property. Can I avail an ITC in that scenario? Now, these are the 4 questions that let's dwell and answer it. First and foremost, when a specific collection which is collected, one time 25,000 rupees which is collected, it cannot form part of your monthly 7,500 because the words used in that is per member per month for sourcing goods and services for the common use of its members. It is nowhere written in the saying that the lift is anyhow goods. Nowhere saying that the common use should be capital or revenue. But one thing which I want to draw the attention is the words used is collected per month. We never collect per month towards capital. Whenever something is collected per month, it is towards revenue in nature. One may come up and argue with me, where is it written as revenue? Show me in the notification, right? But I want you to go by the general principles. These capital collections my view, will not be forming part of the revenue collections that which is envisaged in notification 7 entry 77. Point number 1. Point number 2, can it qualify as a pure agent? Now, the lift, it will be whose asset? Is it an asset of an association, or is it an asset of all the members collectively? Now, if you are saying the asset is all the members collectively, you may ask that, isn't it RWA, all the members collectively? No, both are one and the same. So now I am creating artificially another AOP for you to think that the RWA is a separate body and the lift is not an asset of it. So can it be then pure agent? It is like for the benefit of those members which I'm collecting and giving, can it be the pure agent there? My limited interpretation, I would say no. And it is not a pure agent. It is a purchase and sale. It's a purchase and sale. Should it be included in 7,500 limit, like that 4,000 rupees people plus this 2,000 rupees which is collected, can it be included? My answer again is no. Last, very important, is the ITC on the lift, is it blocked? Here comes again little dicey area. I want members to rethink and see how this analogy can be supported. What if RW say that, look, this is not my asset. This is the asset belongs to the members. I don't take it to my balance sheet as an asset. In my income and expenditure, I am collecting towards the lift and the expenditure of the lift has happened. Invoice is raised, money sourced towards the lift for your use. Can you say that this is a procurement and sale, hence the ITC would be available? Little litigative, but I would strongly feel this is an argument one can fight towards and worth fighting. Avail the ITC, charge the taxes. So that is where in the first discussion I have said, if everything is back to back, there is no question of GST as a cash out. Only when my purchases are exempt or my ITC is blocked, that is where the whole of the math go into a toss. Yeah. So this is on the specific capital collection. Now we will advance our discussion to next possible issue, which is the principle of mutuality. And before going to the principle of mutuality, I want to bring one connecting string to the previous discussion on the capital asset to the mutuality. When are the capital assets procured? Generally, every business at the start of the business or when they're increasing the business production capacity, everything. I will give another example. Look at a partnership firm. 10 partners coming together, contributing capital, buying some machinery, buying some office infrastructure, everything to do business. Now, the capital contribution made by those partners will directly take to the balance sheet as a capital and these as my asset. No way we will say that it is purchased and sold, there will not be any issue. You may argue, can we not apply that to our RWA? The analogy seems to be good, but can we apply? Not every analogy can be applied. Okay. Now, how do we say that? Okay, it is not something which I am for my own benefit. Here, I want to talk about one judgment, a recent IMI judgment, principle of mutuality. Now, the origin before that, let us look at why 7AA has come. And we all know Calcutta Club, Ranchi Club, where the Supreme Court judgment, which said the doctrine of mutuality continues to be applicable. Please note, this is a case of service tax, where they said it would be applicable, and Finance Act 94 cannot levy service tax on member clubs in an incorporated form. And court observed that the Youngman Indian Association, which applied in the doctrine of mutuality, continue to hold even after 46th Amendment by adding Article 366(29)(a). When this judgment happened, interestingly, 39th GST Council meeting has looked into my first slide when I brought 7A and 7AA, had a discussion saying that, okay, GST which is supplied by unincorporated bodies to its members may become subject matter of litigation because there is no specific provision. We are saying unincorporated body and its members shall be distinct members. We are not saying that they are distinct members. In the absence of that effect, so the judgment of the Supreme Court would be applicable and the doctrine of mutuality would be applicable, and these unincorporated or incorporated entities may not be leviable to GST, kind of discussion that went in. And that brought to the genesis of 7AA, where it says activities or transactions. Now look at this word, or transactions, which was not there, which was not envisaged. Now I want you to read this word transaction for buying that lift, the capital asset contribution also, right? Other than its individuals to the members' constitution for cash, deferred payment, valuable consideration. They said it is the scope of supply, but the best part of it, they further clarified, notwithstanding anything contained in any other law timing force, any judgment or decree, the person and its members or constituents shall be deemed to be two separate persons. So, to avoid the mutuality, that has come in, that RWAs are now under, they are both being two separate entities. We may say, okay, the act has been amended. Now 7AA amendment is kind of retrospective amendment. So this entry 70, the fundamental question always happens is, just because there is an exemption entry that presupposes levy is another question that always there, not dwelling into it. So the department thought that they have put a foundation base that the RWA can be levied. Instead of this, a recent latest judgment from Kerala High Court on an Indian Medical Association, where, by the way, it is nothing to do with RWA, where a club or an association can it be taxed on the service supplied to its own members even after the amendment and insertion of 71AA. Please note, this judgment is post 71AA, which has been tested, and where the High Court says, no, it cannot be levied. This amendment is violating the principle of mutuality, and under the mutuality, club and its members are one and the same. The supply is presupposing two distinct persons. Article 246A empowers GST only on supply of goods and services, but the treating artificially that the members and this as two different, I think Parliament could not deem that as a two separate entities. They're just given the sum and substance of this judgment here. Okay. By the way, this needs to be tested in the Supreme Court. So this is very recent judgment, and this is the only judgment which has come up in the High Courts on this matter, and it's a Kerala High Court. So should it be applicable across India? The answer is it is applicable, can be applied in Kerala, but not across India. How does it link to RWA? I've just brought one small the analysis. See, the mutuality has been survived after 46th Amendment is what this judgment is saying. What is an RWA? RWA is also a members' collective society. Maintenance or contributions by the members to themselves. So the same identity argument would apply. Both are not too different. So Article 246A held as ultra vires. The moment that has been held ultra vires, so the fiction is once the monthly maintenance crosses 7,500, that itself you can't say that, okay, that exemption entry is there, so the levy is there. So that goes off. That hook goes off. So RWA will fall under IMA and it itself will become unconstitutional. Now you may say that, okay, if the levy cannot even happen, then what would happen for the GST now, which has already paid? Can I claim a refund? At least the 2 years, can I claim the refund? Now, refund can be claimed subject to unjust enrichment. We know anything collected in the name of tax has to be paid as tax to the government. You cannot have unjust enrichment. What if I have collected from the members, that example which I said, 4 rupees from everyone, out of my pocket, I will do an inverse inclusive calculation and pay the taxes to the government. Can that be taken, and can we say, can that be taken, and can we say that there was no unjust enrichment? I have never collected from the members, then I am eligible for the refund. Or I will take an aggressive position that RWS going forward, I am not leviable to GST, but I am paying it only on an ad hoc basis, saying that the tax is deposited only as to ensure my future litigation is safeguarded. This is one aggressive thing. The bigger RWS needs to explore before taking this position. But all those RWAs who have held the mutuality as a concept, never paid the taxes, they can still hook on to the IMA case. Biggest relief for you would definitely be that you're fighting on a case where Supreme Court has established that mutuality exists. Even after 7AA, the High Court judgment said that that is ultra vires and constitutional. So the limitation period of covering section 74 will not be applicable. It would only be 73. This is one biggest benefit one can consider and take it. Next thing. Friends, there were some questions that came up. I would be taking those questions. I have only two more points which I wanted to discuss. The next is agency services, where the builder is handing over to the association. Builder is handing over to the association. I will give you a small case study. And by the way, most builders today, when a sale agreement is done, along with at the time of registration, they will collect a bulk maintenance fees. So Sunrise Meadows, a residential project in Bangalore, at the time of possession, they are collecting 2 lakh as one-time maintenance fees and sinking fund. All right. But the builder has an obligation to maintain the apartment till some time, till maybe all the units completed, the external areas are completed all the time. The builder would continue to maintain it. And builder is charging the monthly maintenance from the members separately. Let's say 7,000 rupees is charging from the member separately. And this 2 lakhs, which he collected the monthly maintenance or the sinking fund, he has kept as a separate liability in the books, parked untouched. Instead of calling sinking fund, let's say future maintenance advance. I am going little aggressive position. I am saying future maintenance advance. I don't even want to take the argument of the fund, but it is parked into the separate thing. Let's say after the first year, builder has transferred the entire unutilized corpus to RWA bank account. And RWA has later decided to use this corpus to install solar rooftop panel. Here you can start thinking of multiple things. And why did they do it? My maintenance is going to 9,200 because of the solar rooftop. This 2,200 rupees electricity bill is going to come down. Various things. Questions that you need to look at it is, will a builder liable to pay GST upon collection of 2 lakhs? Now you may say sinking fund. I have changed the word to advance, future maintenance advance. Even though the word used is the maintenance advance, the obligation is on the builder to hand over this advance. This is lying in the books in the nature of liability, not income received in advance. See, from the accounting standard perspective, whenever I receive income in advance, I would be recording that as a liability. This collection is not there in the books of accounts as income received in advance. This is lying in the books as a liability. I have to pay to the association when it is formed. So the builder has no obligation to pay GST service tax whatsoever when the maintenance advance in collected. When does he need to pay? Again, going back to 2 subsection 31, only when a portion of this which is appropriated towards maintenance. So if, let's say, out of the 2 lakhs which is collected, let's say the builder has taken 10,000 rupees because the monthly maintenance was not sufficient. builder has drawn a P&L and he said total collected so much, total incurred so much, the difference which I'm collecting from the advance. When such application is made, the levy would kick in. All right, you are saying that it's an advance and it is not in the hands of the builder liability. This unutilized 1,90,000, which is unutilized, is transferred back to the society. Now, would society treat this as a GST income which needs to be paid at that point when it has handed over the money, or when society appropriating to P&L or utilizing it? My view, when society is receiving the money, recipient of money is society, payment of that money is the builder. There is no nexus of the supplier and recipient in this transaction to levy. I am of the view even the test fails there. Again, the society, when they hand over that money, okay, it's again a little aggressive and litigative view, doesn't arise because they are not collecting directly from the members as the advance for the future supply. So this is money is received from a third party to be provided services to the fourth party. Like that. By then, some of the owners would have sold their units and gone, whatever it is. But society, when they appropriated this amount over the course of the transaction, necessarily have to pay GST at that point. Right? This is another point one has to consider. Another important issue for discussion is a pure agent transaction. We have Rule 33, where who is a pure agent is during the course of the supply of services. If I am incurring something on behalf of my recipient and I'm collecting that money from the recipient, it will not constitute as my supply. And the classic example, while filing my GST returns, the GST amount I'm collecting from my the customer and I am paying to the government. So that collection which I am doing is not my income and not my expenditure, right? In light of this, I want to bring Circular 206. Circular 206, para 3.3 talked about, is GST applicable on reimbursement of electricity charges received by real estate companies, malls, airport operators from their lessee or occupants? Now you may say, how? This is something nothing to do with RWA. It includes the housing societies also. Now, what does the circular says? This collection would become a composite supply. So the charge on GST electricity recoveries will unless you satisfy the pure agent conditions, that is the billing occupants exactly what the utility, your collection and outgoing is same without any markup. Then you can treat it as a separate thing. Otherwise, it is a composite supply. In case of a composite supply, it would automatically principal supply is the rent. So the electricity charges which is collected would also become the rent. So if RWA or the owner merely collects the exact amount shown on the BESCOM, GESCOM, some DISCOM bills and passes on at cost, it would be deemed acting as a pure agent. A question that would come up, when an RWA is applying this transaction, let's say every month they are getting a water bill of some 3 lakh rupees. Every month they are getting a water bill of 3 lakh rupees. There are some 300 apartments. So each apartment they are collecting 1,000 rupees exactly. Maybe 1 rupee more, 1 rupee less. Exactly they are collecting towards whatever which is there. And I will go back to that example where I have shown an invoice where I have collected the electricity or water charges separately. So my question is, should this circular be applicable made when the services are consumed by the members of RWA, or the circular should be made applicable when RWA is supplying these services to some of the commercial establishments which are there inside the society. Large society complex, there would be a grocery shop, there would be a dispensary, there would be some commercial activities with some space which is available, which is given on lease, and the RWA is providing it, the electricity required for it. So for which clause this circular would be applicable? Is it applicable to the first point or second point or both? I am leaving it for your discussion for a minute. And if that being applicable as a pure agent, if that is applicable as a pure agent, okay, I'm not endorsing that it is applicable. Two important things which I want people to look at is electricity bill of the discoms, where RWA is paying the discom on the society service connection and recovering exact amount, showing it as a separate line item. Second thing, there is a piped municipal water. Can we apply the same logic? And more importantly, water itself is an exempt supply under serial number 99. RWA is merely paying the board on behalf of the members. The consumption of water is actually by the members, and RWA is only a conduit doing that. Okay. And to justify their view, the RWA is relying on the point saying that, okay, if from the bylaws, it is collecting the statutory charge on behalf of the member. Resident is paying exactly what third party is paying without any markup or margin. On the invoice, a separate disclosure, distinct line is done. And I am not making I am, as an RWA, I am not creating any benefit interest out of it. Purely it is for the consumption of the members and not by the RWA. And the original bill is in the society's name or in the resident own's name, and it is available for inspection. I am of the view the circular 206 has to be interpreted when they have clearly said that it is on an actual basis that is being collected. Look at when the buildings units are given for the lease, the lessee does not go back and change the meter name. The meter would continue to be named in the name of lessor. At times, lessee themselves directly pays the bill, or the lessor, if it is a common meter, let's say there is a commercial establishment and it's a common meter, and lessor collects the bill directly from all the tenants because of the common meter and pays to the government. Those are the scenarios would be covered for the pure agent, and not a scenario which we have talked about, right? So I have covered a lot of the points which are applicable for the RWA, and there could be some more issues that would come up. Let me look at the questions that now the members have posted it. But again, I will reiterate 2 points. Firstly, all the points which I am saying, I am only giving you an analogy or a food for thought for you to think before making a decision. It's a view which is given of a consultant. Point number 2, the decision who is taking in a business where the owner is deciding I'm okay to fight for it, vis-a-vis a decision which is taken in an RWA is different. RWA is represented by a governing council who changes year over year. They got to be extra cautious if they are taking any aggressive positions. Now, let me go back and see the questions, some of the questions. Okay, good. They have made a copy of the questions. Okay. So, there are questions.
Is there an issue?
No. I'm just looking at the questions, ma'am.
Okay.
Okay, the questions are visible, right?
So you can take up the questions on without
Yeah.
the sharing also.
Yeah. So
But,
the
these
first
are-
question. Pardon me, ma'am. Okay, the first question, the water tankers, rainwater harvesting, clubhouse charges are built in two separate lines, GST and non-GSTable. Is that okay? Is the question number one. This is definitely litigative. However, that serial number 99 per se is exempt. I would strongly believe that the department would treat this as a composite supply, and bifurcating that is a litigative position one is taking. Next, one of the project collection, which is external painting, facade repairs, subject to GST when raised on members. These one-off collections cannot be forming part of your monthly maintenance. It has to be treated off, and they are liable to GST. Does 7,500 limit apply only to the regular monthly bill? Yes, it is applicable to regular monthly bill. And like I said, it is per flat, per month, per member. Okay. And it doesn't get annualized, nor it averages the that monthly thing. After Kerala High Court judgment, IMA, should RWA stop charging GST? Pinch of a salt, I would say it is still no impact. One has to wait for the Supreme Court judgment. But yes, this has to be dealt with the professional body. Get an opinion drawn from your consultation. Single HT connections and submeters. RWA is recovering actual power cost from the members. Again, same like the water bill. I know certain parts of India, some societies have taken a view. The electricity supplied by DISCOM is exempt, so RWA is a pass through of the same amount, unless it is a pure agent. Rule 33 is violated, so the exemption can be claimed. But I am of the view that this is a litigative position. It is better to collect and pay tax on it. Can RWA claim ITC proportional and pass the benefit to its member? Yes. You can proportionately claim the ITC and pass this ITC benefit to the members. That is where in your monthly charge collection, I have said you will do those bifurcation. GST on cultural events, Durga Puja, Sports Day, this is funded through a separate collection. Here comes that this Durga Puja or the sports event, it is independent of that capital collection, which is lift, which I said is independent of profit. It's not a capital receipt. Now it's a monthly, it is a revenue receipt. Having said revenue receipt, does it form part of that your monthly collection, or it's a separate thing? I am of the view that this shall be treated as a taxable event because the activities and transactions are covered under 7AA, and it has to be treated separately. Unless otherwise you are raising funds monthly to include these activities also. Raising funds to include these activities also, it would be forming part of that. But if you're collecting separately, then you have to look at it. Then the next thing is monthly fees of 7,000 rupees. Once in a year, it is collected lump sum 20 lakhs for the lift return. Is GST payable on the corpus? Yes, the monthly fees is out, and the one-time lift collected would be part of it. Aggregate turnover more than 20 lakhs, then they're paying advocate for builders litigation. Does RWA liable for RCM? Whenever you are looking at an RCM entries, you also have to see whom is applicable. each of that entry is differently worded. For some of the RCM entries, just because RCM is applicable on the recipient, not every recipient, it is only registered recipient. But some of the RCM entries is the taxable person, some of the RCM entries is the business entity. So here the RCM is applicable in the current case. Builder is handing over maintenance corpus to RWA. Does GST is applicable? Mere transfer or deposit is not a supply, so GST is arising only when RWA is apportioning it for the maintenance. That's my view. Builder is managing society before formation. Now, even before the society is formed, builder is maintaining it. The maintenance charges is applicable. A question that comes is that's exemption of 77C is available to the builder. This is the important point I want to dwell, though which is not explicitly I have discussed. Does that 7,500 is that exemption can be given to a builder managing society? Should the 7,500 exemption can be taken by the builder? Let's say builder is collecting only 5,000 rupees. Now, should that benefit of 5,000 rupees can be that 7,500 be extended to the builder? The answer is no, because this entry is applicable to an unincorporated body or a non-profit entity. This is not applicable to the builder. This is again another common thing which I noticed, that the builders also apply that 7,500 limit for their things. Can the water charges be excluded for the turnover test of 7,500? The answer is no, it cannot be excluded. However, that Rule 33, which is on a litigative position, you can look at it. GST on corpus fund collected in installment over the years, should it be clubbed with the monthly fees? Now, if the GST is collected in the installment separately, like I said, every month my collection is 6,000 rupees, but once in a year, the 25,000 rupees I am collecting towards corpus. So the corpus installments are taxable irrespective of your monthly collection of that 6,000 rupees. So it should not be included with that 7,500 to do the test. Phase one of phase one is completed. Phase two is going on. Only for phase one, RWA has been formed. Is it okay to form this in the phase wise? Of course, yes. But phase two owners are going to be members only once when they're legally admitted into the association. So it's always advisable to builder to run the phase two till it is completed under facility management services run by the builder. All right. So these are the key questions that I could notice, which we have taken, and yeah, I think we have covered most of the question. I thank Indirect Taxes Committee ICI for giving the wonderful opportunity for me to present before you on certain important issue on the Resident Welfare Association. Every time when we take up a session, it's more enriching and knowledgeful for us, exploring plethora of issues. And whatever I have discussed today is not free from issue, but it is only a food for thought for you to see that there are such a small topic, Resident Welfare Association, entry 77, subclause C. Inside of that, there's so many issues which are going on. That indicates that GST is not free from litigation. Every step, everyone has to carefully look at how they have to take care of the transaction. Taking a consultation, a written opinion would always save the taxpayer. And RWA being managed by a governing council and not by one person, there should be a double caution that needs to be taken care. With this, I come to end of this session. Thank you. Imprit Madam, over to you.
Thank you, sir, for providing us such an insight and deep insight and a comprehensive view about RWA. Thank you. Thank you for your valuable time and support.
Thank you.
Thank to technical team also. Bhargav, we can sign off for the day.
Yes, sir, we can end.
Bhargav, meeting.